All right, guys, welcome back. So it's going to be another weekly review. So this is following on from last week. So my intention with these reviews is to show you my process inside and out. The process on how I improve as a trader, the process that and the diligence and the dissecting and reviewing that I did that took me from break even to profitable. So again, just a little recap. So I've spent the last few months trading mechanically, and now as of last week reintroduced discretion back into my trading. And when I was trading mechanically, I did not need to do a weekly review in depth, let's say, like this. Whereas when I'm trading discretionarily, it is critical, like so critical. If you are trading a discretionary model, you need to have some kind of review process that goes in depth like this. Again, you can make it your own. I'll actually include the template for this below. You won't need to put in your email or anything. I'll just leave it as a link. Use this if you want, or just have something that you do at the end of each week, even each day. So I have a daily report card and then a weekly review as well. But we have to be learning from our mistakes. And the critical thing for me, the core thing, is identifying the difference in my setups. So if you can see here, I've identified what defines a C setup, a B1, an A1, and an A++. So you can see here, I'm actually putting on over 10 times the amount of risk on an A++ than I am on a C grade setup. So there's that much of a difference. And again, that comes from the profit factor of these systems, the expected value of these systems, the win rate, and the potential returns. So when the market is set up for my A++ setup, it is my duty to get uncomfortably big in that, because this has a much greater asymmetric risk reward than this one here. These are bread and butter, easy money setups, let's say. And these are when the market is set up, a lot of volume is trapped, and we can see a large capitulation. So it is, of course, I'll be talking you through the way that I trade, the mistakes that I made this week, what I learned, etc. And of course, you can utilize that into your own trading, but also I think it's just the whole process of how I go through it and how I note down the lessons, etc. So let's get into it. So overall this week, I gave myself a D. It was not a good week in terms of, especially this week I was very busy. I was filming 3 days out of the 5. So I only really had one full day when I was on the charts all day. So trading definitely took the back seat this week, and it shut up my results for sure. So I finished the week on positive 0.5%, but there was some beautiful movements, and I was on the wrong side of some moves. So I'll show you that. So my just initial notes, little summary of the week was discretionary trading. It really does require a different degree of preparation and reverence. So this is a big word that I like to use in terms of, if we're entering into a position, we have to come with some level of reverence for that. We can't just be firing in lots. I'll just fire in a couple of longs here, a couple of shorts here. Like, we have to, the way that I became profitable was putting more reverence on actually entering in a position, entering in much less. And if I enter the position, I would have to hold that. So we're performing high level activity. We can't be as nonchalant as mechanical. I missed opportunities this week. I was on the wrong side of 2 beautiful setups, 2 weeks in a row. The pairs need to be reduced. So this is the main thing that I realized this week, is I'm only going to be trading, I've removed FX now, so just going to be trading gold, oil, and NQ, and I'm only going to be trading them after signal days. So here is, we covered this briefly last week on NQ when we had that beautiful close and breakout. So a close and breakout is potentially one of, like I say, if you get a closing breakout on a Wednesday as the highest closing price of the week or a month, you should be licking your lips. And I was not paying attention to the daily close. I was looking at this on the 5 minute, just trading it from peak formation to peak formation, completely oblivious to the fact that on a Wednesday we closed in breakout as the highest closing price. This is one of the strongest sell signals we can get, and I hadn't marked that up, and I was just trading this. So I did manage to catch a beautiful entry. Again, price action was creeping down into the open as we closed in breakout just before the New York Open. I bought here and I managed to catch this burst up, but was oblivious to the fact that the overall day my bias was off because of this close and breakout, this beautiful opportunity that we'd been handed to us here. So this is the way that I should have been trading it, having the breakdown and then entering in as we pull back. This is just a 3-to-1 then. So next day, follow through. We can actually go through this on the chart. So this is a beautiful opportunity. Like we see here, we have a closing breakout on a Wednesday is the highest closing price. This is the highest price of the month, I believe. Yeah, highest close of the month. You can see that these lines here, these red and green lines are the closing price. This was the highest closing price of the month on a Wednesday. What does that mean? Potential capitulation the next day. So here again then we had a closing breakout, highest closing price of the week. So this closing price becomes a resistance level. So anytime we pump back up into that, that is a selling zone. So obviously New York Open happens. I could have taken this scalp, which I did take, you know what I mean? But I should have been aware that the overall move I should have been looking for was a downside, not this small scalp on the open. So then anytime we pump back up into that area, we can be looking for shorts. And then the next day, pump, sideways, dump, pump, coil, dump. That is one of the characteristics that I look out for. So had I been, obviously I wasn't on the charts this day, I was filming, but pump, coil, get that coil volume coming into New York. And again, we could have utilized the same mechanical entry. They break in structure. Bias is already taken care of. The area that we're trading in is the selling zone. So once we break down, could set a limit entry on that 618 and then target back just down to the weekly open, target this liquidity of the previous day's lows, any of these areas down here. Beautiful opportunity there, which I was oblivious to, not paying attention to the charts. And one of my biggest standout lessons this week is I've missed these two closing breakouts on a Wednesday, just from trading too many pairs, having too much going on, lack of preparation, etc. So going into now next week, let us see what we're looking at. Okay, so new month, new timing cycle. There's always new opportunities at the beginning of a month. So March has opened, we close and break out long, close and break out short. It does look, we have a 4-hour shift bearish. Nothing major telling in terms of where price could be going. Strong bearish weekly closure there, and yeah, monthly still inside the previous month. Weekly, we've broken out of the previous week, so let's see where we open up on Monday. But yeah, nothing crazy on the higher time frames. Potential shorts though, it is looking, if I was going to be looking for a direction initially, I would be looking for a sell high opportunity coming into the week. Sell high opportunity, but again, we're only going to trade off of daily signals, so we want to have a signal day. So right now in the day we don't have a signal day, we just have a bearish closing day. We did close in breakout outside of this range, so we could look for a continuation there, maybe pumping back up into this area here, but nothing major so far. I want to see how Monday trades, see if we get a stronger signal day. So this was our signal day here, close and breakout, highest closing price of the week, and now we've just broken down. So we've had 1 day short, 2 days short. So we could be getting that day 3 follow through. Then oil, another mistake. So obviously with all the fundamentals going on right now, all of the US and Iran stuff, oil has just been absolutely ripping. And just trying to be too smart really, just trying to fade it, trying to take a reversion, thinking that before we go on the next big rip that we're going to revert a little bit. But here, this was enough of a reversion. Weekly open, we retested that. There was no need for this to come back down, and I was just trying to be too slick and just completely on the wrong side of it, just thinking that we were going to have a push, have some kind of pullback. Very happy with the entries and the way that I traded these, but just directionally, just buy that, man. Just buy it. Like, stop trying to overcomplicate things. Very nice entries. So we had like sweep, previous day sweep. So you can see here this level, this red level is the previous day high, break of structure, second break of structure, and then as we pulled back here, I had my limit entry here, and then I added a little bit as we pulled back further, and then obviously just got taken out. And then again, I thought, okay, cool. Well, we've taken out all of the week's high. We've now broken down. So we broke through this structure point here, this little peak formation. Maybe the order flow is switched bearish, set a limit entry on this level up here, went off to filming, and it was just literally this tiny position, like less than 0.2%, or exactly 0.2% actually. Just a little small position, but yeah, just directionally wrong on that one. Yeah, oil absolutely ripping. So as the uncertainty escalates and continues, this probably will just, for at least the short term, just keep ripping. Doesn't mean that there won't be short trades, but I'll be looking more for on the long side now. There's no need to be trying to be too slick and too smart, trying to short a market that's just absolutely tearing. So lesson learned this week, just even though the entries were good, do not be shorting a market that is just got such a strong fundamental reason for it to be ripping. Actually, I might leave them on. No, I don't need to leave them on. There's nothing that needs to be studied about those. Cool. So yeah, oil, then a little, Jesus, look at that. Look at that. And I was selling. Look at that for a weekly candle. So we have taken a shitload of liquidity there. Wow. That is sensational. Cannot believe I was shorting this. Gapped up. Yeah, wow. We've taken out months and months and months of liquidity there. But yeah, the fundamentals, let's move away from the liquidity. The fundamentals are just so bullish right now. Again, just supply and demand. So the HOMOs, I don't know how to pronounce it, 20% of the oil trades going through there. It's going to cause delays. Oil price is just going to go up. And then with that, oil being an inflationary asset in terms of everything that gets transported uses oil. So when oil prices increase, price of everything increase. So it is a very inflationary asset. So we got to take note of that, in terms of everything, and then the interest rate decisions for the US and all of that. So yeah, that was NASDAQ, this closing breakout, messed this one up, was on the wrong side. Oil, just trying to be too slick, shorting a market that's absolutely ripping. And then gold. So gold, we had the beautiful trade last week with using our signal days. So we had inside bar 1, inside bar 2, anticipating an explosive day, which we got. And then I shorted here. So I shorted initially here, added a little bit as we pulled up further. Beautiful move down on gold. I don't actually have it on the chart here. I don't remember what my exact entry and exit points were. I know I shorted lower than the 618. And I had my stops just above this area here. So nice move down on gold. And then that was the only trade I took that week, and I just marked out this one. So signal day here being we had our inside bar, so similarly to here, inside bar. So after we get an inside bar, what I want to do is I want to look for, okay, where do we take traders the next day? So we have an inside bar being a day that stays inside the previous day's high and low. Once we get that, that's volume contained. That can then cause an explosive move. So when we see that, when we see an inside day, so we can see this was the previous day's high, this was the previous day's low, we're very much inside that. So we want to see where do they take traders. So they pump price up into the highs. So I'm always looking at the range extremes. What range are we in? So we're in, and let's extend this out. Where is extend? There we go. Extend right. This is the range high, and this is the immediate. For this day, this was the range high. This was the range low. So we pump into the highs, and then we break down. And then as we're coming into New York, what are we doing? We're pumping up, pumping up, pumping up, generating, engineering liquidity, and then the range tightens. So this is the behavior that I want to see when I'm going to take a trade. I want price to be pumping up in a direction, and then I want the volume to coil. I want the range to tighten, because when the range tightens, that's getting ready for an explosive move. So we're pumping up into the highs. There we go. So then we already have our signal day, inside bar. So we're looking to trade from one of the extremes. I'm looking at this and thinking, okay, do I want to be selling from the highs or buying from the lows? Here we come up and we break down. So we create a lower low on the day. So we've already traded up high, and then we create a lower low. Once we get this, this is a potential as to how we could trade this. Again, this is how I optimize, how I improve. And in my discretion, it's less about data. It's more about, okay, going in and studying how could I have traded this better going forward? How could I have positioned myself in this market going forward? So here we trade up into the highs, and then we break down. So once we put in a lower low on the signal day after taking traders high, that tells me price we could get the expansion to the downside. And this is one way to get into that. Draw a fib from the top of the bottom to the break of structure on the signal day, and then get tagged in on the 618, stop at the high, and then just target 3 to 1. And that would have played out nicely. So just one way to study inside bars. And like what you can actually do then is now I'll add this to my playbook to show you how I do it. So playbook, super important. Okay, I'm already in my playbook. So I'll add this. This would be, to me, this would be a B setup. We don't have a closing breakout. We're not up high. This is just going to be a playbook entry. So this is an inside bar. And then I'll answer these questions. So I'll go through what was the optimal trade management for this trade. Here we can see entry on the 618, and then just target at 3 to 1. Where could I have added size? What did yesterday do that made this trade identifiable? So we had an inside bar. And then what geometry did the previous session set up before that made this an A+ trade? So this is not an A+ trade. So the geometry was basically which peak formation high and peak formation low are we using as reference points. This is our range high, this is our range low. So we pumped up into the range high and then broke down. So then this becomes our new range high, new range low, and we can look to take a trade from that. But the only reason we're using these ranges and the way that we're trading from the range tightening is because we've had the signal day, because we've had the inside bar. So we can clear this now. And then wait for our next inside bar. So I'm going to leave this zone here on because this is our support area. This is basically on the daily super ugly. On the daily, this is our rejection point here, rejection point to the upside and downside. So this is the only level that I'm really worried about here. We then put in another level here. Let's say I'm looking at this, I see lots of rejection here, lots of rejection here, but we don't have any downside rejection until here. So I'll be looking at this. So only looking to potentially short from this area, and for longs looking to come down and continue. And then how do we break it down further? We utilize the signal days. So waiting for a signal day. So we've actually just printed a signal day on Friday. So we have an inside bar. So we can see Friday stayed inside Thursday's high and low. So we actually have a signal day on gold. So we can look at the high and the low of Friday and look to trade, see where do they take traders Monday beginning, so Sunday night. Where do traders get taken? Do they get taken down into this low here, which is potential for a long position, or do they keep pumping price up on the open into this range here for a potential breakdown? So we know now we've had a signal day, we know there's volume contained here, we can actually look for a setup on this on Monday. So out of the 3 pairs I trade, this is the only one that I'm going to be looking to take a trade on Monday, because it's the only one that's given us a signal day. So hopefully this is being, some of this is useful, even if you trade differently. It's just discretionary trading in general, let's say. So what went well, and like this is then how I reflect on it, what went well. So waiting for signal days resulted in a lovely gold pop, ignoring signal days, and 2 recent losses. So these are more just everything we've been through, progress that we make. So yeah, this is super important. So observe which peak formation are we trading in coming into the session. So like we were mentioning, we have our range highs and our range lows. We can only really see this if we zoom out like this. So we can see coming into this session here, we're trading into the low. Price is being taken, or traders have been taken down low. So this is the whole thing of buy low, sell high. I want to be buying inside peak formation lows. I want to be selling inside peak formation highs. So it's just one thing to note, no matter what strategy you use, are we in a peak formation low or are we in a peak formation high? So you can see at this point here, we'd be inside this peak formation high. At this point here, we're inside this peak formation low. So it's just a handy one to look at. Here's a gold trade we just been through, pumped up into the highs, engineering liquidity. And then yeah, just an overall review. So how's my psychology? Psychology was fine. I just wasn't on the charts too much and just on the wrong side of some moves, but psychologically I held on to everything. Trade management was fine. Even though they weren't the best trades, I held them stop loss or take profit. Mostly stop losses this week. 2 nice wins, and then the rest stop losses. Preparation very poor. I gave myself a 1 out of 5. Completely trading was just backseat this week. Results showed that, but we did learn a lot. Even results don't matter in terms of learning progress. I learned so much by dissecting this, going into all this detail, turning everything inside out, that this was a massive win week for me. Again, I prioritized other things this week, prioritized filming, and still so happy with how the week went because of how much better prepared I will be next week thanks to this review process. Thanks to my playbook, thanks to my weekly review. Again, yeah, I'll put it all down below. You can use it. And yeah, guys, that's pretty much it. I'm going to keep doing these. So let me know any ways I could do these differently if you are still watching. Any things you'd like to see in particular, and I can make sure to adapt, adjust. And yeah, the intention for these is just to to make everything public, just to show, again, everything about the process related public. I specific like numbers and everything, I want to keep that private. I want to be like an open book, but again, this is a topic for another video. Like energetically, I've noticed negative impacts from showing P&L. So I really want to show everything except for P&L. I've seen it negatively impact my psychology, my results and everything. But I do want to be as transparent as possible, so I'm more than happy to walk through every single trade. But yeah, guys, that's it. Have an amazing week. It is now Sunday, so ready for these markets to open up on Monday. And yeah, I will catch you guys soon.